Oh, I had just been talking and talking and talking. Thank you, One Who Cares is in the house. One Who Cares, thank you for popping in. You know, we got to get the formalities out of the way. Like I was saying, okay? Let me get the formalities out of the way. Shayla Williamson is in the back, but we're in the front of the house right now. Let me get my formalities out of the way. Wait. I'm so excited about this morning. I'm so excited about this morning, y'all. Can you hear me okay? I'm so excited about this morning, y'all. That's right. Thanks for tuning in to Larger Curves today. I hope that you are smashing buttons on the way in. This morning, we're going to have our coffee room hour with none other than Shayla Williamson. Shout out to Shayla Williamson in the house.
Thank you for having me.
Oh,
Can you hear me okay?
I can hear you okay. Can everybody in the chat hear Shayla okay? One Who Cares is in the house. Krista Marie is in the house. My girls, thank you for being here early and up with us. Okay. So I believe they can hear you because I can hear you. I could hear me before though, and they couldn't hear me. So I don't know if this is really what it's supposed to be. No, it is. We good. Okay. Well. So yeah, just smash the buttons. You guys know that it helps the algorithm. If you're sharing the video, if you're liking the video. One Who Cares says, good morning, Shayla.
Good morning,
Shayla. Yes.
Good morning. Good morning to everyone who's joining us at 8 a.m. on the West Coast here.
Yes. I don't know. You know, a lot of my people, they're all over. I got a New Zealand person that comes often. I have an East Coast person. I got a West Coast person. So I got the people. So I'm not sure where they're tuning in from today, but I love that they're here to hear about this insurance. Because I've been telling my subs, look, you guys, I started this new adventure selling life insurance. You know, I went from keeping people housed to making sure people stay housed. That's the way I'm looking at it these days, right?
That's a good way.
I used to get them the house before, but now I make sure they can keep it after in case something happens. I still do both, by the way. But I'm just thinking like people need to find out more about insurance. So I decided to call in the professionals because y'all know I'm a noob, but Shayla's a professional. She's a professional. So she's going to answer our questions. She's going to explain some things to us this morning. And I made this little reel. Shayla hasn't seen it yet, but it's just the types, whole, universal, and term life insurance we'll be going over today. And then the pros and the cons, and then it's kind of what the differences are. So I made like a little reel and I can stop it at anywhere. But it was just for some visuals in addition to our lovely faces.
Well, visuals are important. They're definitely important. Some folks will get it auditorily. Some people will get it, visually. So
definitely. Why don't you tell my people about yourselves, Miss Shayla?
Sure. I hail from the greatest city in the world called Indianapolis, Indiana. If you haven't heard about us, you probably have seen us on your channels in May, Indy 500. That's what we're known for. We were known for having the Indianapolis Colts before Peyton Manning left us and came out to Denver, but that's neither here nor there. So greatest city.
You're not mad about it, right?
Greatest city in my opinion. But yes, I've been living in California for the past 3 years. Grew up in Indianapolis. Went to college in Indiana, in a small town, DePaul University, and studied biology. Had no plans on going into financial services whatsoever. Even went on and got higher degrees in what I thought was a career path towards medicine. But, as life would have it, you got those twists and turns, and thank God when one door closes, another one opens. And I found myself with the originally a local American Income Life office in Indianapolis. And I came in for the interview. I love the enthusiasm, and I love the diversity in the people. I love the youthfulness of the individuals there. And, I just thought, what, I think this is where I'm supposed to be. So spent 5.5 great years working out there. Spent the last 3 years out here since I got married. You can't really convince too many folks from the West Coast to move to the Midwest for understandable reasons. So once me and my husband got married, he wanted to live here where he's from, and I came along, and still been enjoying the ride ever since with American Income Life. For those who aren't pretty familiar with our industry or our company specifically, I guess my role would be mid-level, senior level manager slash trainer, slash insurance sales agent as well. So I'm glad to be here today, and let's get it rolling.
Awesome. Awesome. Thank you again, Shayla, for coming in for this coffee talk that we're about to have. Okay.
Oh, I got my coffee, so I'm ready.
Oh, me too. Me too. Are you sure that's real coffee? Because y'all know, Shayla's a vegan, y'all. I don't know. That could be dandelion root coffee. I'm gonna try that.
It is of a Colombian strain, but my creamer is non-dairy creamer.
oh, I bet.
Yes.
Let's see. Let me see if I can. Can you hear that? I can't hear it. I just like background music when we're playing a reel.
Okay.
So, term life insurance, whole life insurance, universal life insurance. Those are the types that we'll be talking about today. And I could tell you the benefits and the differences, but like I said, I'm still a noob. And I want you guys to be able to really understand it. And Shayla's fabulous at being able to explain these things. So, first off, at American Income, which I am a part of also, at American Income Insurance, as an agent, I sell term and whole life insurance. So I know the products, but let's let Shayla break them down. So
sure.
Shayla, what are some of the differences between term and whole life insurance? Is that a good place to start first?
I think so.
Okay.
I think that will keep it basic. You don't necessarily have to be scholarly on these types of products, but it's good to know the difference between the two, so that way you have the right questions to ask when you're approached or when you're inquiring about them yourself. So to keep it simple, term life is like renting an apartment, whereas whole life is like owning a home. Okay. So when it comes to term life insurance, people are probably more familiar with that one because that's what you get through work. Most companies, will offer their employees a benefit package, and most people just sign on the dotted line. They don't necessarily, really dive into it and read and whatnot about the ins and outs, because you're going through orientation. They're sending you a bunch of stuff, and the main thing you want to get correct is that W-2 and I-9 form to make sure the deductions are right.
Right.
When it comes to term life insurance, most companies will offer their employees a group term coverage. And so what that means is that by you working there, you are a part of the group, of other employees and associates, and they're willing to pay for you to have, a certain amount of coverage because you're an asset to them, essentially.
Right. Yeah.
They would, not necessarily be as productive without you. So therefore, they're willing to pay a certain amount in case you die while you're working there. So that way they don't lose out too much on the productivity, so to speak. And that's, essentially the policy, of course, in a way also has a benefit of, going to your own spouse or loved one. But it's really as a part of you being an asset to them. That's right. Why companies will give individuals group term coverage while you're working there. When you no longer work there, you will always have the option to take it with you, just like you have the option to continue medical insurance when you're no longer working for a company through what's known as COBRA. When that act was actually put into place, it basically gave an individual the opportunity to continue to self-insure themselves, essentially, when they're no longer at a specific employer. The difference is that now you have to foot the bill for what your employer was willing to foot, because you're no longer an asset to them. Same thing with the group term life insurance. Any policy that you read that is a group term policy, you'll see in the terms and conditions that you can keep this coverage going if you are no longer a part of the group. The difference is that you will have to go through the underwriting process and reapply all over again. So they'll take in consideration that of the age you are now, not the age you started the group term coverage, not the age that you originally hired on at, but the age you are at that moment. And they'll also take in consideration your health, any other habits or what have you, things that affect insurability, essentially, because insurance is a transfer of risk. Essentially, you are transferring the risk of you as an individual to a company. So that way, when you die, your family's not necessarily burdened with the risk, or the ramifications, shall we say, now this insurance company that chose to insure you is. So that's group term life insurance. You can go and get your own term life insurance. You don't have to necessarily be employed to get it. A lot of times individuals love going through a term life insurance policy because it is cheaper. Essentially, it's cheaper, and that's because as a person gets older, the term coverage is going to increase in cost. Okay. And so a lot of times people don't necessarily realize that when they're getting a policy, just like they don't realize with their group term coverage that once they retire or once they're no longer part of the group, now they got to pay for that policy at the age that they are as an individual, because there's no group to foot the bill for them. And so your individual term life insurance coverage as well will increase in cost, even if it's perhaps what they call a level term, meaning that the premium is going to stay the same while the coverage is in effect. Once that coverage expires, because that's what term means, it means at some point it's going to terminate. Once it expires, then you now can reapply, but of course you're older. So therefore, the coverage will cost you more if you're looking to get the same coverage that you had once before. And then also, along with that, they'll take in consideration your health. So if your health has changed at all during the initial term period, there's no guarantee that they're going to reinsure you. Right. So all term life insurance policies will expire at a certain point. The terms and conditions of your policy, that depends on the company. There are some where the premium will go up over time in order to keep the same level of coverage, or there are some where the premium will stay the same and the coverage will decrease. Right. And it's really just up to the individual to make sure that they educate themselves on their policy. A whole life policy is different in the fact that it is going to last your whole life. So from the age you got it until the age you die. Okay. The premium stays the same during that time frame, unless you were to make any changes to your coverage. Either you decrease the face amount of the coverage or you increase it. But also, whole life insurance builds cash value, just like your savings account would, except you're just going to get a much larger return on your dollar than what you would get with putting money into your savings account, just sitting and letting it grow. What a lot of people, have to understand about insurance overall is that you're essentially just taking pennies to buy dollars. Right. That's what insurance is. You are taking pennies to buy dollars. At least with your whole life policy, those pennies are an investment that's going to grow more dollars, so to speak. You'll hear, different celebrities and whatnot talk about that investment during Life Insurance Awareness Month. I remember, a year or 2 years after I started with American Income, because I didn't know anything about this before I started working here. Most people, don't, unless this is like what you're going to do. Now there are different colleges out there that got programs on finances but beyond just economics.
Right.
I took economics in college, but now you can actually major in financial services. You can minor in life insurance. So kudos to anyone out there who's actually coming out of college knowing about this and knowing what they want to do. But I remember when a year into the business, I saw an article where a famous rapper from the South, Master P, had actually, said that he got his record company, No Limit Records, started from a $10,000 life insurance policy that was left to him when his grandfather died.
Right.
And I think, what people have to, understand is that when it comes to, quote unquote, the rich getting richer, a lot of times is those mechanisms in which they do are mechanisms that are available to the average person. Yes. A lot of times we're raised with the thought of someone who's rich or wealthy probably just spent their life in a matter of corporate greed or something cynical or sinister, and that's how they accumulate their wealth. And a lot of times that's not necessarily the case. What they call the transfer of generational wealth in most cultures is done by insurance.
Right.
And when you hear someone like Master P break it down on such a simple level, like, hey, this is how I started my record company, I think it then makes it more human to the average consumer. Because, perhaps, we weren't necessarily thinking about life insurance when we're, going back through the No Limit, records in that period of time in our life. I may be dating myself, but that was my music. So anyway, though, but whole life, it builds cash value. That's money that's, tax free. Not to make another rap reference, but I do listen to a lot of hip hop music and a lot of genres. But anyway, I heard Waka Flocka talking about how he uses his, cash value from his whole life insurance to essentially move money without having to worry about the government getting involved. Exactly. Because that's another thing people don't realize, the tax, so to speak, is already built within the premium. Mm-hmm. So there's no taxes when a whole life insurance policy pays out to a beneficiary or a term life, period, insurance period. There's no tax when it pays out to the beneficiary. Right. And so with the whole life policy building cash value, you can take that money, pull it out, invest it somewhere else, okay, or perhaps move it to another whole life policy and help that one grow a little bit faster for you. When it comes to universal whole life, that's basically the whole life and the term life combined. To keep it simple, okay, your premium, of course, is going to start off being locked in, okay? Mm-hmm. That's what, the perk is with the whole life insurance. Your premium is locked in as well with the universal. Your cash value is going to grow at an even faster rate than a regular whole life policy would. However, as you get older, the cost to insure you goes up, but your company's not going to send you a bill for it. Instead, they're just going to start taking money from that cash value that you've been building. Okay. And you'll get to a point to where you no longer have any cash value. And at that point, once the cash value is at zero, either the death benefit's going to go to zero, or you're going to have to increase the amount that you're paying into the policy, essentially to rebuild it back up. So when it comes to, and that's most universal policies, there are some that have, better rates and better, qualities, given those were universal policies that we saw back in the early 90s, so to speak. When it comes to a universal policy, they're going to basically break it down to you in this way. There's a guaranteed interest rate, and then there's the non-guaranteed interest. And essentially, they're really basing it all on the stock market. On the guaranteed side, we can pretty much bet that by the time you get a certain age, your cash value is going to start to decrease, and then the value of your policy is going to start to decrease. With the non-guaranteed side, we're hoping that, the market stabilizes, that everything's good, and that your cash value will continue to build, and build, and it will build on the back end of your policy. So the coverage amount actually increases as well based on the cash value increasing. However, that is based on market conditions. Right. And in my lifespan, I think I've lived through, 4 stock market crashes. So it is not like it's a so.
You mean one? You're so young, Shayla. You mean one?
I'm pretty sure it's been 4. So
oh my gosh.
Yeah. So it's especially considering this most recent one in 2020. So it's not so far-fetched to actually believe that guaranteed side of what they put in your policy is more likely what's going to happen versus that non-guaranteed hopefulness of your policy growing and your cash value growing. When it comes to saying, what is the best option between all 3, I will not say one is better than the other, because everybody needs insurance for certain things. Right. At a certain period of time in their life. And there are certain types of insurance that are better for one thing versus another. Okay. I would say a whole life policy is better to have covering your final expenses, and your funeral and burial or cremation, because ultimately you don't know when that's going to happen. It could happen tomorrow. It could happen 80 years from now. You don't know. So having something that has that permanence would be better in that scenario. Right. Your mortgage, hopefully you shouldn't have to deal with forever. It's essentially a mortgage is supposed to just be, 15 to 30 years, 15 years for someone who's more aggressive and paying it off. God bless his family that I just met with on Saturday, who refinanced for a 35-year mortgage term, and they've been in the house 20 years.
Oh my God.
Yeah. Yeah. So, I mean, it's not supposed to be that long, but perhaps a term life policy would be better to protect something that's going to be temporary, like your mortgage or like your income, the people that you see after that, you take care of, your spouse, your kids, or relatives or whomever. You do that through your income, right? The money that you're generating on a daily basis, and ultimately, if you're no longer here, that contribution to the family's gone. So hopefully, hopefully, hopefully.
The reason you're mentioning mortgage specifically is because there is a type of insurance people can get to make sure their mortgage gets paid off if they die, right?
Exactly. Yes. It's called a deep
income.
Yeah.
Like that amount of income. Let's talk about those specifically. I bet people didn't even know that you can get insurance to cover the amount of income you would have made for a certain amount of time. And you can also get life insurance to cover the mortgage payment. So like if you're not there to make the mortgage payment, your family doesn't have to worry about it. And those are very specific insurances. Go ahead and tap into those a little more if you don't mind, Shayla.
Yeah. So for sure, what Leah is referring to, specifically is having a different type of term life insurance. So when it comes to, protecting your income, you really got to think about how long are the people that I love the most going to be dependent upon me. So, essentially, if that's your kids, if that's your spouse, it's more likely than not they're going to be dependent upon you while you are working in your prime working years. So if you plan on retiring, right, you're going to essentially need a term policy that's going to protect your income from the age you are now until the age of retirement. And, however length of time that may be, whether it's 30 years or 20 years, 15, 10. You can have a term policy that lasts any amount of time. Just keep in mind that as that policy renews at the end of those, that time frame, the premium will go up. When it comes to the mortgage, you can get what's called a decreasing term, which makes the most sense for covering a mortgage. But people also have to understand is that mortgage insurance to cover your life essentially is not the same as PMI, which typically is built within a loan. Protective mortgage insurance protects the bank because they don't have the confidence in this mortgage getting paid if you're not alive to pay it.
Right.
Okay.
So a lot of the clients think that they already have. They're like, oh yeah, I have insurance for my mortgage, and they're talking about PMI.
Exactly.
But that is not the same, people. You can physically get a separate life insurance that will cover the mortgage cost. It doesn't cover the bank's cost of loaning you the money. It covers your cost of the mortgage. So it's very different. Check it out.
Exactly. So with the decreasing term, it's the type of term policy that's best suited for a mortgage because you're not going to have the same amount of your mortgage every single month. At some point, the mortgage is supposed to decrease because you're paying it. So therefore, you don't need as much insurance to protect it over time either. So a decreasing term policy is one where the premium does stay locked in. You don't have to worry about it increasing on you. However, the coverage amount will decrease because over time, you're not going to need as much protection on your mortgage if you're paying your mortgage down. And those are policies that in most companies you can get for a span of, either 30 years or 15 years, depending on how much time you have left on your mortgage. But it's important to note that money, when you die, if you die, like I said from the beginning, term is like renting. It's for if you die. Whole life on the other hand is for when you die. So if you die before the mortgage is paid off, this decreasing term policy is going to pay to your family versus that PMI, that protective mortgage insurance that's built into your loan is going to go to the mortgager. So that's not going to the family.
Exactly. And it's not keeping a roof over your family's head, people.
No, not at all. And I really wish people would take the time to, do research, especially when owning a home, because that, essentially it is an asset. Okay. Some people will say what they will about home ownership now, and that maybe it's not necessary as far as assets. But if you think about, the housing market now, okay, and I would invite anybody to look at their house and their neighborhood and how long that they've lived in. I don't care where you live. There's going to be somebody who's willing to buy it and flip it and do whatever else. And all of a sudden the value has skyrocketed. So you really have to think about that's your land. Don't just be willing to let it go. I see people who are elderly that have a reverse mortgage. And I'm just thinking like, man, perhaps if someone had talked to them and their spouse about a decreasing term policy that, I'm not a mortgage officer. I'm not a loan officer. Let me put that out here. I'm not saying, anything against individuals. I'm not trying to knock anyone else's hustle out there, as far as, profiting off of reverse mortgages. But I just think about how many families could keep that asset in the family if perhaps one person decided not to do the reverse mortgage when the other person died. You know what I mean? Like, what if there had been a decreasing term policy to protect the mortgage, for when either spouse died? And so that way, instead of, and just so everybody knows, a reverse mortgage essentially, when one spouse dies, the other spouse remains in the house. thankfully no payments, needing to be made. And then boom, when they die, then the house goes to whomever. Right. So what if, and not whomever is in the family, whomever is in the original bank who funded the mortgage and what have you. So, like I said, I'm not necessarily an expert on reverse mortgages, but I just think, like, why not just, have a policy to where no one has to move out. We keep this going, and then we keep this asset in the family, and whoever's the remaining spouse left over doesn't have to worry about the payment because this decreasing term already covered it. So I know that was a tangent. I didn't mean to go off.
No. The more information, the better, because I feel like the more information, the better, because I'm from the 80s and knowledge is power. Okay. So
very true. Very true.
So I think that was an excellent recap of the specific insurance for your mortgage and the specific insurance for your income. Because like this picture shows right here, our monthly income. So what we get up every day for, people, when we go out here to these jobs, when we're doing our entrepreneur hustle, what are we doing it for? That monthly income. And what do you need that income for? Your family, for your life, for the other things, for your hobbies, for the things that you want to do outside of work, right? So this picture right here is showing us that the monthly income, we eat with it, right? Mm-hmm. We pay our tuition, our allowances, we pay our loans and our credit bills. We pay all the bills for the house. We pay the house and the mortgage and the medical expenses. And by doing this, we're keeping our family covered, right? And so the thing about insurance is that there are different types of insurance to cover each of these things, so that if you're not there, what could happen if you're not there? There's the chance. Where'd my picture go? My graphics are off, you guys. Sorry. There it is. Okay, so if one person were to die, what happens to the other thing holding it up? That other income that was, everybody's living paycheck to paycheck already. A lot of people. I'm not a prophesier of lack in any way. So there is more than enough to go around, and I hope you're getting yours. But God forbid when the day happens, because none of us make it out alive. So to be prepared for that by having insurance. So one of your legs falls, that income is gone, that income to cover the mortgage, the income to cover the groceries for the kids, that you're scrambling, you're in emotional turmoil, your life partner has just passed, you have to be strong for the kids, you need some money. What can you do? Have insurance. That's something that you can do, is have insurance in place, because then the life insurance, you guys, will be able to help you keep things held up like that other person was still there. It'll keep you it'll give you the support that you need, so that you're not doing everything by yourself. It'll cover your kids so that maybe they're not as stressed by seeing you not as stressed. There's so many benefits. And I myself, y'all know I'm old. Y'all know I've been telling you how old I am. And I wish I would have known what I know now as in insurance. Now that I'm in insurance, I wish I would have known what I've known now then. Because why don't we talk about the determining factors of a premium? So in my mind, and I used to think I knew everything, girl. So I was like, insurance is too expensive for me. But it was really not too expensive then. Now it's too expensive now that I'm older. But the determining factors of your premium are what? Age and your health, right?
And habits as well.
And habits.
Put that third one out there.
Age, health, and habits. So because your habits determine the other two. So that's those actuary things that people talk about, right? So those three things determine your premium. And like we were mentioning, with the whole premium, the whole life premium, those stay level, those stay the same. So if you're at optimum age, optimum health, and have optimum little habits, then your premium could be $40 when you're 40 years old if you didn't increase the coverage. Why don't you tell the people about that, Shayla?
Yes. So yeah, basically, the three items or areas that determine someone's insurability are their age, health, and habits. So looking at age, the younger you are, no matter if you're getting whole life insurance or term life insurance, it doesn't matter. Insurance period. The younger you are, the cheaper it is. That's why companies like Gerber Life Insurance Company have been so profitable. Companies that sell policies specifically for children, because you're literally paying a few cents a day to make sure that your child has a $10,000 or $25,000 whole life policy. And a lot of times people don't want to do that because they're like, well, I don't want to profit off of my child's death. And I'm a person, I don't think of the worst case scenario. I think of the best case scenario. So the best case scenario is that this child grows up to be 65, gets ready to retire and leave their job with their benefits, and has the peace of mind knowing that their parents started a life insurance policy on them when they were a baby. So now they don't have to worry about not having coverage because they're no longer working. I cannot tell you the number of individuals I know over the age of 60 who are working for benefits alone.
Right.
Okay, just for the benefits alone. So keep that in mind. Okay, let's not think about worst case scenarios when it comes to our children. But it's just a good point to make. Yes, having a policy on a 5-month-old baby is going to be cheaper than having a policy on a 25-year-old man, versus also cheaper than having a policy on a 50-year-old woman or whatnot. It's all because as you get older, okay, you get a little bit more close to death, point blank. So the older you are, the cost to insure you is more. You want to get a policy, preferably if you're going to do whole life and term life. I think that's the most likely combination for a lot of individuals, because they're getting policies based on where they are at in life. So a whole life policy for a child is great. Doesn't mean that child can't add on a term life policy through whatever company that they want to or need to later on to protect those other assets that Leah just discussed. And keep in mind, a lot of times people think, oh, well, I already have insurance. I can't, if I pick up another policy, will that interfere? Will that conflict? No. Okay, this is the time where you can have your eggs in multiple baskets. Okay, have a policy over here, have a policy over there. It doesn't matter. Do what you like.
Too much insurance, as long as you can afford it, you can't have too
much. Exactly. And when things get tough, don't necessarily think that you have to cancel something. It's not all or nothing when it comes to your life insurance, because any company will be willing to work with you to perhaps reduce your coverage to bring your premium down, so that way it's comfortable for you at a time. Because we all know that when times are tough, there's still going to be certain things that we're willing to spend our money on, point blank, and deal with the consequences later. Why not be at least willing to put your money towards something that's not going to have any consequences for your family at any point in time? Because no matter how much insurance you have, no matter how much pays out to a family, I've never heard of someone calling an insurance company and saying, hey, you gave us too much money.
Right.
My mom died and you gave us too much. We need you to take some of this back. I've never heard of anybody doing that.
Exactly. So, like, insurance is kind of like sugar with no cavities. Right? It literally is, because the payoff is always sweet. Like, I mean, you see what I'm saying? Like, that was kind of good analogy. You get what I'm saying?
I mean, yes, but that can also lead us into the health aspect of.
Okay. I don't want you guys going out there and eating 5 pounds of sugar. All I'm saying is the benefits are sweet. It's good while you're paying it, because you have the relief of knowing that every time I pay this $25 that I would have maybe spent on, I don't know, a burrito taco, 4 burrito tacos with a side of consomme. I don't know why I know that exactly. But but if you were willing to give that up like once a week, and then in exchange have the mental freedom of less stress, knowing that you just took that step to make sure that your family is covered. I mean, I would pay $25 a week to have less stress.
Exactly. But yes, the other aspect though is the health. Your health is taken consideration. People who are younger typically are healthier. Children. That's why it's great to have a policy for a child before any health issues set in. Before there's perhaps high blood pressure, diabetes, a height weight ratio that doesn't line up with where you should be on that chart at the doctor's office. It happens to the best of us. Trust me. But a lot of times you'll talk to them and they're like, well, I thought it said it's against the law to discriminate against pre-existing conditions. That's with medical insurance. Okay. That is with your health insurance. That's not with life insurance. Okay. Life insurance is not government regulated. Okay. So therefore, they can say, what they deem to be unhealthy. So keep that in mind. As you get older, we're all just one doctor's appointment away from being told something that's going to put us in a completely different realm. And, there are some carriers out there that will give someone, perhaps the above standard rate because of how healthy they are. They come out and they do a physical and they find that, this person has, 5% body fat and, everything else right about them, and they get the premium rate, quote unquote. Which is essentially it's like stuff going on sale at the store. That was the original rate, but they just marked it up for other folks and then put it on sale. But anyway, I digress. But your health can play a major factor, and then lastly, your habits. Okay, and by habits we mean essentially things that make you more risky. Are you an auto racer? That's definitely risky. You're more likely to die than the average driver out there on the road. Do you do parachute jumping? Do you do skin scuba skydiving? All those
do you take drugs that were prescribed by a doctor?
Yes, and that too. I've had some people who were upset when they realize that their loved one who is in jail can't get a policy right now. And it's like, well, that person is at a higher risk of dying versus the standard individual who's not incarcerated. When you get out of jail, and it's the most insurance companies and their underwriters go based off of statistics of those factors. Okay. So, an insurance company cannot legally discriminate against race. It cannot discriminate against where you live. It cannot discriminate against your income. Ultimately, if you're willing to pay $300 a month, okay, they can't tell you no because you live in a low income area or whatnot. They can't discriminate against that. However, they can take into account certain risk factors, and that's where the habits come into play as well. So individual who's been arrested recently, what's the risk or chance of them going back to jail within a certain period of time? They can choose to either deny you coverage or have you pay a little bit more based on that factor alone.
Right. That's incredible information. I hope you guys are following along. I hope you guys are enjoying this while the professionals talk and sip our coffee this morning about insurance here on LRGA Curves. Smash the buttons if you haven't already. Leave a comment if you have any questions. If you catch this in the replay, leave a comment. I'll get your questions answered. And then there was one more thing we needed to talk about. So we talked about the different types. So far, we talked about whole life insurance, term life insurance, and universal life insurance. We've talked about the definitions of those and what the pros and cons are of each as we see them. We talked about the different types of insurance. Also, you can get it for your income, you can get it for your mortgage, you can get it for your actual life, you can get it for your final expenses, you can get it for the kids' college education. There's like a cornucopia of insurance products out there. Now, let's talk about something special at American Income Insurance where we work, and that is how we convert our terms to whole life products that's not something that's found at a lot of different insurance companies. And can you talk a little bit about that?
Yeah. So here, as Leah mentioned, at American Income Life, if an individual does take out a term life insurance policy with us, they can easily change that into a whole life policy at any point in time, as long as it is 2 years before the policy expires. Okay, we have different term policies that last for different lengths of time, or last until a specific age. And so as long as they're looking to change that into whole life or convert, as Leah said, 2 years before the policy expires, we'll do it without any health questions being asked. Ultimately, that's an option for someone perhaps who wanted the whole life policy or wanted a whole life policy at first and perhaps couldn't necessarily have the funds to pay for the amount of coverage that they needed. So therefore they got a term policy, and then just as life went on, there's a little bit more money in the bank. So now they can afford to perhaps move some, if not all of that coverage over into a whole life policy, to where now they don't have to worry about their premium going up periodically. They don't have to worry about the policy ever expiring. And now it's also building that cash and loan value for them that we had mentioned earlier. That's not an option that, every company has, but that is an option for, any of our policyholders. And, a lot of times you'll see an individual who gets a term life policy because of perhaps advice that they've heard from other financial advisors. There's, tons of podcasts on there or on the internet out there, that you may hear that preaches buy term and invest the rest. Spend little to no money on term life insurance, spend as little as possible, and take the amount that you would have had to pay for a whole life policy and just take that difference and put that into investments, and then you should become self-insured. And that is a motto that works for some people. It's not for everybody. Okay. Right. It just isn't. There are certain people from different walks of life to where the investing, paying a financial advisor to watch and monitor their investments or knowing the stock market themselves, that's not in everybody's deck of cards. So for those individuals, and then also, there's some people that, hey, maybe the investments didn't work out the way they planned, and they don't want to be stuck with this term policy and then stuck with no insurance at all. So at least for those individuals, we have the opportunity for them to, as long as their term policy was with us, they can convert that policy into a whole life policy if things didn't work out as planned, so to speak.
That's excellent information. Excellent information. Is there anything else you think the people should know? We talked about insurability. We talked about the types, the pros, the cons. We talked about, was there anything else? I think we covered, what's in my thumbnail?
I think we pretty much hit everything, as we're getting ready to wrap up here. This has been, a good 50 minutes of solid information.
Yes.
If there's any questions, that anyone has that we did not answer, definitely reach out to us. Reach out to,
and then I'll be able to get them that way. And then I'll make sure that me and Shayla can get to the information so we can get your questions answered. And if you need anything, you can reach out to, my email is largalife@gmail.com for these type of questions. And Shayla, what's your email so they can reach out to you directly?
Yeah. So you can reach out to me either via email or social media. Email is Shayla W. So that's as my name is spelled here, SHAYLAW @CA as in California -AIL as in AmericanIncomeLife.com. So
Yeah.
Shayla W at ca-ail.com. You can also find me. I'm on, social media. I'm on Facebook. There's apparently a few other folks named Shayla Williamson on Facebook. But anyway, I'm on Facebook. I'm on Instagram. Instagram handle is at Shaylore. So SHAYLOURE. And you guys can hit me up there as well. But yeah, this has been cool.
Okay, and one last thing for all my people that are all over the world, all over the United States, we're always hiring at American Income Life. So if this feels like something you'd want to participate in and feels like something you want to start doing for yourself so that you can have the opportunity to make unlimited amounts of income while helping families, you can get at Shayla also about that, or myself, and we would be glad to get you the information to move forward on that. You want to talk a little bit about the employment opportunity and how it's nationwide pretty much, and where they are, they can reach out and we can get them working.
So if you know someone who perhaps is feeling overworked and
Your audio just went into a tube. Uh-oh. Can you guys hear her okay? It sounds like you're in a box. It just in the middle of getting ready to tell people about the opportunity. Well, you can go ahead. I'll just be real quiet. Go ahead.
Okay. So hopefully this straightens itself out. I don't know how that happened.
Solar flares, you guys. That's what happened.
But yeah, if you happen to know someone who's feeling overworked or underpaid, or perhaps just looking for another stream of income, we do have opportunities for individuals to achieve their financial dreams and really just change their life overall. So we are nationwide. We are also in Canada, as well as New Zealand. So if you're looking for a new career opportunity, definitely reach out to Leah, reach out to myself, and then we can point you in the right direction.
Definitely, because we would love to see you in the bullpen meeting, people. The bullpen meetings are everything. That's when you talk about goals and get to the next level of management and all that stuff. And then you start talking about how much money can you make in a month. And you're like, I want to make 100,000. And then they tell you how it's possible and show you all the things that you can do to try to get there. And so, it's pretty intense. And if you are ready to, like she said, if you know anybody that's overworked and underpaid and looking for a new career, they should get at me or get at Shayla about Opportunities Unlimited here with American Income. And we're rated 24th happiest place to work in these United States, people, on the Forbes magazine. Okay, so it is. They keep you pumped and jazzed. It's kind of like this kudos competition thing going on in the back office, but it's great. It's great. It keeps you engaged. Okay. And plus you get to help the people. Like we said, all the benefits of life insurance that we mentioned. And we also have one other thing we didn't get to today, but our time's almost up. And that would have been the A71 insurance. And that's like an accident insurance that is available for people that if you were in an accident that makes you have to go to an emergency room, the policy would pay you for your trouble and having to have been in that accident. And those are awesome policies also. So we would have you covered from the rooter to the tutor, okay? And everything in between. I mean, it's like this way and this way, the insurance products that we offer. It's like encompassing, okay? And you would have an opportunity to not only use those products, but sell those products too. So Shayla Williamson, my mentor, thank you so much for popping into Larger Curves this morning. I really appreciate your expertise, your energy, your time, and your willingness to come on here and share with the people. I hope that we can maybe do this like once a month. I don't know if this takes off. I'll let you know the feedback I get. If this takes off, would you be willing to come here again and help the people understand this insurance and how fabulous it is? Okay. And people don't talk about it because part of the other thing the government did is make it so that they can't like advertise in an obvious way the way they used to, or something somebody else said about. I'll show you guys the Instagram on another thing. Anyway, we get into the end of our hours. I hope you're smashing that like button, smashing the subscribe button, hit that bell so you can get notified next time I upload a video here on LRGA Curves, whether it's about talking with the professionals, whether it's about talking what's going on in society, whether it's world news or pop culture. LRGA Curves got your girl, got you, okay? And you can come through and we'll talk about it and we'll share the information. Check out Shayla Williamson on her Instagram, on her Facebook, or get at her in her email. You know where to find me. I'm LRGA Curves everywhere, okay? I appreciate everybody who stopped by today. Leave a comment down below, and we'll see you in the next video.